If you want to make a smart home purchase in Orlando in 2026, you need to understand the market you're buying into. Not the headlines, not the national narrative, but what's actually happening on the ground in Central Florida right now. Today, I'm going in deep on the Orlando housing market. Inventory, pricing, where the opportunities are, where the risks are, and what I'd personally do as a buyer right now. Let's get into it. Hey, welcome back. I'm Gianni, and if this is your first time here, I'm an Orlando relocation specialist who's been in this market full-time for years. Today, we're doing a proper market deep dive, the kind of analysis I do with every relocation client before we start looking at any homes. Here's the problem with most housing market content. It treats the US real estate market like one thing. The market is cooling, prices are dropping, wait to buy. None of that means anything unless it's specific to the market you're actually buying in. Orlando has its own market dynamics, its own supply and demand drivers, its own submarkets that behave differently from each other. And understanding those specifics is what separates buyers who make confident, well-timed decisions from buyers who wait too long, overpay from acting too fast, or buy in the wrong submarkets. So today I'm giving you the full picture, the macro context, what's actually happening in Orlando right now, a submarket by submarket breakdown, what I'm watching as a lead indicator, and my honest take on what I do if I were a buyer in the market today. To understand where the Orlando market is in 2026, you need to understand the path that got us here. Orlando's housing prices have roughly doubled between 2018 and 2022, a staggering run driven by historically low rates, pandemic-era migration from high-cost cities, and constrained new construction inventory. The market was genuinely unstable at that pace, and everyone who was paying attention knew it. Now, in 2023 and 2024, we saw a meaningful correction in pace. Not a crash, but a normalization. Transaction volume slowed as rates rose, and some buyers' demand was priced out. Days on market stretched. Some sellers had to adjust their expectations. The overheated frenzy cooled into something that looked much more like a functionable market. 2025 brought stabilization. Inventory began recovering from historic lows. Builder activity continued, especially in the growth corridors. Rates settled into a range that the market adapted to. We saw selective appreciation in the best submarkets and flat to slight soft performance in less desirable ones. As of 2026, we're operating in what I like to describe as a very stable market, and I'll explain what that means for you as a buyer in a moment. The long-term fundamentals that drove Orlando's appreciation have not changed whatsoever. Population growth into the metro continues. Job creation across the diversified economy continues. The immigration from high-cost states continues. Those are durable demand drivers that underpin the market's long-term trajectory. Now, let me tell you exactly what I'm seeing in the market right now, because this is where the abstract data becomes actionable. Inventory is significantly better than it's been in years. We're not back to pre-pandemic norms, but buyers today have meaningfully more options than they did in 2021 or 2022, when you might have walked into a home for the first time and had to write an offer before you even left the driveway. That pressure has eased in most price ranges in most submarkets. But, and this is important, the inventory improvement is not uniform. In the well-priced, move-in ready segments in the best school zones, quality homes still move extremely quickly. I'm talking about a well-positioned 4-bedroom home in Lake Nona or a turnkey home in Oviedo corridors. Those are still seeing multiple offers in many cases. Those buyers who are waiting for a fire sale in those specific areas are going to keep waiting for who knows how long. The homes that are sitting, and there are more of them than there were 2 years ago, tend to have one of 3 issues. They're overpriced relative to current comps, they need significant work that the seller has not priced into, or they're in a less desirable school zone or location. So the market right now rewards buyers who are specific. If you know your submarket, know your price range, and have done your research, the conditions are genuinely favorable. If you're trying to lowball across the board, hoping something sticks, you're either going to miss the good ones or overpay for the bad homes. Now, let me walk you through Orlando major submarkets and what I'm seeing in each one. Lake Nona, still the most active growth market in the metro. New construction pipeline remains strong. Resale inventory is limited in the most desirable pockets, meaning Loria Park especially. Price appreciation here has been more resilient than the broader metro. Opportunity windows, like the new construction incentives that builders are offering right now, rate buydowns, closing cost contributions, design center credits, represent real value that won't last indefinitely once demand fully normalizes. Now, Horizon West and Winter Garden. These are known as the growth corridors, continue to expand. More inventory here than almost anywhere in the entire metro thanks to the active builder pipelines. This means more negotiation power for buyers, and it means more builder motivation and incentives. If new construction is your preference and you want to be in an excellent school zone with strong community amenities, this is where I'm pointing buyers to right now who want the best value per dollar. Windermere and Dr. Phillips, resale market dominates. Inventory has improved, but quality homes still hold value well. Negotiation here is more possible now than it was in 2022, but don't expect distressed pricing on well-maintained homes in these premium areas. Winter Park in Maitland, stable and always in demand. The luxury end of Winter Park has softened slightly from the peak, which creates selective opportunity for buyers who've been priced out of their target price point. Still a premium market though overall. Kissimmee in the tourist corridor, the most buyer favorable conditions in the entire metro. More inventory, longer days on market, more negotiation room. The trade-off is school ratings are more variable and you need to do your homework on the HOAs. Short-term rental dynamics if you're buying a near or resort corridor, because that's genuinely a very big worry. Now, I can't do a market deep dive without talking about interest rates because they remain the single most powerful variable affecting buyer behavior right now. Here's my honest take on rates as a practitioner who's in the market every single day. The buyers who are waiting for rates to drop significantly before they buy are making a speculative bet without real cost. Every month you rent in Orlando while waiting is a month you're not building equity, not locking into a rate, and not benefiting from the homestead cap on your taxes. If rates do drop significantly, the buyers who are already in the market will see their equity increase as demand surges, and a refinance puts them at a new lower rate with existing equity. The buyers who are waiting to get in are now competing with everyone else who is also waiting in the market that just got hotter. That said, I'm not telling you that rates don't matter. They matter enormously to your monthly payment. The correct response to elevated rates is to shop your rate aggressively. Look at the available programs, take the builder rate buydowns I mentioned earlier where they make sense, and make sure your total monthly payment is within your range that you're genuinely comfortable with. The buyers who I've helped who have the most regret are always the ones who waited. Waited for the perfect rate, waited for the perfect market, waited for the perfect moment. There is no perfect moment in real estate. There is the moment where the math works for your life and you make a confident, informed decision. Okay, let me close with my honest recommendation for buyers in the market in 2026. And this is what I tell a close friend or family member. If you've done your research, you've identified the right neighborhood for your life, and the monthly payment on a well-priced home in the area is within a range you can sustain, buy now. Don't wait for a better market. The conditions you have right now, more inventory than 2022, more negotiating room than 2022. Builder incentives that represent real value are favorable conditions. They will not last. If you haven't done your research yet, if you're not sure what part of Orlando fits your life, if you don't have a clear pre-approval and a realistic sense of budget, do not buy yet. Not because the market is bad, but because buying in the wrong place with insufficient preparation is how you end up with regret. Do the work first. The submarket I'm most excited for relocation clients right now, the Horizon West or Winter Garden corridors, because the combination of new construction incentives, excellent schools, community amenities, and relative value compared to Lake Nona creates a genuine opportunity window. Although Lake Nona remains a strong long-term bet if you're in healthcare or tech roles, and for buyers coming from premium markets who want the Orlando version of their current neighborhood, Winter Park continues to be the best city for charming premium options. If you want to talk through what this means for your specific situation, your timeline, your budget, your target area, that is exactly what I do in a free 30-minute strategy call. Link is in the description below. Subscribe if this is useful. I post 2 videos every single week about Orlando real estate and relocating. And drop your market question in the comment below. I answer every single one.